media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I've started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So, this brings us closer. I'm able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything.
Good afternoon, everybody. Thank you all so much for joining today's webinar. So today our topic is fairly simple. We're going to talk about what kind of an investor are you, right? So this question, though it is very basic, it's at the heart of making all your investment decisions truly work for you, right? Understanding your investor type, it doesn't just help you pick the right products. It actually shapes your long-term strategy, your ability to stick with plans, and how much peace and calm you're able to feel during both good and bad market times. Right, so we will go over this and what sort of asset allocation will work and what are the various time horizons and all of that, right? It is very, very important to understand that everyone's life, every investor's life is different: income, expenses, goals, responsibilities, risks, etc. So naturally, your investment strategy has to be unique as well, right? So what works for you might not work for others because you are completely different investing personalities, right? So first up, why knowing investor profile matters. Let's begin with a very fundamental question. Why does it matter what kind of an investor you are? Firstly, your investor profile, it guides every major decision, right? So what you invest in, how frequently you buy and sell, and how you handle market volatility. Second, not knowing this investor profile can lead to a lot of mismatched investments. Like a conservative person, a conservative investor putting money in high volatile assets, or an aggressive investor getting frustrated with slow or safe returns is not the right combination, right? So it's very imperative to understand this. And most importantly, understanding this profile, it helps you avoid emotional investing, like panic selling when markets fall or chasing the fads at peak, things like that, right? So knowing your investor profile, it not only helps you aim for the right level of returns or performance, it protects you from a lot of costly mistakes and brings peace of mind, which is very, very required in investments, right? So we all know that based on, so this is broadly the asset allocation, but before we go to that, let's look at the three main categories that investors are divided into based on their risk profiles. There's one conservative, there's moderate, and there is aggressive. So conservative investors have lower risk appetite. Moderate have medium risk appetite, and aggressive high. So for these conservative investors, we do more, they tend to go more towards large caps or fixed income instruments, and they prefer safety over returns. Moderate investors, there's a mix of equity, debt in their funds, and they're willing to ride the moderate ups and downs that come. Aggressive investors have high risk appetite, so they go full throttle on equity, direct stocks, small caps, right? And they are willing to accept all the big swings for potential gains. Because if you had to give each kind of investor a tag, right? So conservative investors, they value capital preservation. Moderate investors, they want balance. And aggressive investors, they love that adrenaline of being invested and they're comfortable with all the big fluctuations. So you ask yourself here, what's more painful? Is it missing out on big upside or seeing your investments fall in value? This is where you can figure out what sort of an investor you are and invest in asset classes accordingly. Right. So like you can see in this fund, the function of each asset class, right? It gives you that sort of eyeball into what sort of an investor you are. And, it helps you arrive at how much you can afford to spend. Right. You all need cash in your portfolio for liquidity, for capital preservation. Conservative investors, you need fixed income instruments, right? Because each asset class comes with a certain caveat, comes with a certain, like I said, caveat. And investors have to be cognizant of that in order to be able to evaluate what sort of an investor they are and how long they can be invested for. Which brings me to the various timelines that are available. Like we have split the kind of investors into three buckets, we can also split these goals into three buckets. Each investor will fall under different buckets depending on what their goal is and depending on what kind of investor they are. Right? So there are short term, there are medium term, and long term goals. But let's acknowledge one truth here, that investor behavior is shaped both by logic and emotion, right? Because human psychology, it plays a huge role in how we invest. Right. So first we have the fact that when markets, are very euphoric and it's tempting to jump in when there's panic, our instinct is to immediately sell. There's a certain overconfidence bias that comes with it, right? Many of us, we sort of believe that we can beat the market when things are going well, leading to riskier bets. And there's herd mentality that we go, we flock towards consensus. So in all of this, we lose sight of our goal and we fail to understand why we even started investing in the first place. And we're unable to ascertain as to which bucket we fall in, both in terms of what kind of an investor you are and what sort of goal you are setting yourself up for. Right. Now, next is what determines your investor profile. So your investor profile isn't just about your current age or income. It is an intersection of several factors. There are objective factors like, age, income, family situation, financial obligations, etc. And subjective factors like your tolerance for uncertainty, emotional reactions to loss, belief about the market, etc. And your risk capacity, which is basically how much risk you can afford, may be very different from your risk appetite, which is how much risk you want to take. And understanding this difference, it helps avoid putting yourself in various uncomfortable situations. Right. So what are some ways that you can use to assess your risk capacity? So if you get onboarded with us, you can contact us, reach out to us at any time. There is going to be a risk profiling test that will be done first. Through a questionnaire, your ability and willingness to accept drawdowns or temporary losses is measured. Right? There'll be a series of questions that you will have to answer. And once your profile is set, there are standardized ways to map what sort of investments that you want your funds to be allocated to. And then we take it on further. Right? So once you take that test, you will be assigned with a risk score. And depending on that, we will classify you as a conservative, moderate, or an aggressive investor. Depending on that, conversations will happen with the lead or client, depending on what sort of an investor they are, where they would like to be invested, etc. Sometimes what happens is their risk score might show them to be aggressive, but they actually might not be willing to take that much of a risk. Right. So what do you do in such cases? You have to be see when you see two sort of personalities, one on paper and one actually in investment behavior, you have to be very cognizant and very aware. As advisors, we have to be very careful of where we put the money because we don't know when the tables will turn, right? Which is why the risk profiling test sort of gives us direction in terms of where each investor would like to see themselves, right? So like we know investor types by risk capacity, we also know investor types by strategy. So there's value investor, there's growth investor, there are passive investors, there are active investors, and there are buy and hold investors, right? But now, more importantly, how to sort of define and refine your profile, right? So you assess regularly. Your investor type can evolve as circumstances change, and you revisit your portfolio and you adjust your strategy. You diversify no matter what, right? However conservative you are, you need to have a diversified portfolio, because otherwise you're not going to see any sort of change in the portfolio. So having known what sort of an investor you are, just some things that you can follow, right? First up, you set investment goals. This is even before you um, assess or see what kind of risk appetite you have. Then you understand your risk tolerance. Okay, I have so much money that I want to invest, but my capacity to take risk, or my willingness to take risk, is only so much. So I want to deploy and invest accordingly. And depending on your risk tolerance, you might change your mind in terms of how much you want to invest. You might have a bigger corpus uh, sitting there to invest, but you will pace your investments in such a way that it does not seem too overbearing on yourself as well. And then you build an emergency fund, no matter what kind of an investor you are. And then you choose the right investment platform or the right advisors, and you constantly monitor and adjust your investments. If you are doing it by yourself, you can do it. It is going to be a little bit of a tedious task, but if you have an advisor, they will help you constantly review your portfolio every month, every 2 months, or every quarter, and give you a comprehensive review of all of this in like a yearly basis, right? So it's very important for you to take stock of what sort of an investor you are, uh, how I can match that with my investments. And if some of you already have investments running, you may want to take a risk profiling test to see if the funds that have been given to you actually match your risk profile. Because conservative investors would not like to see that their portfolio falling very very badly, right? Very aggressively. They will immediately get disheartened, and first instinct is to just uh, pull all of the money out, right? So it's very important to understand. So I hope this webinar this is this was meant to be a very short and sweet webinar and educate some of you about risk profiling and how it is important to incorporate that in asset allocation, and understand that what works for you may not work for others as well. But this plan of action remains the same for everybody. This is a blueprint that every investor should follow, but the way that they might follow it will differ. The investment goals might differ, risk appetite will differ, the amount they start investments with will also be different, right? So I hope this sort of gave you some motivation to go back and review your investments. If you want to become, or if you want to be onboarded with us, you can always reach out to us on this number. I will also put the number on the chat box. You can always reach out to us at any time. We will get in touch with you. You can bring your external portfolios. We will review it for you. You will be mapped to a relationship manager. You will go through a risk profiling test. And from there, we can start your investment journey as well. So that brings me to the end of this very short yet sweet webinar.